Hopefully you shorted it. It's okay because it fell. So I'd say a couple of things. So firstly, we'll start on the, well actually what I can do is I can get both the ends, can't I? I can get pound yen here, okay, and I can get CAD yen here, and we can cross-examine them. But obviously they involve different currencies, okay? You can see that right here. But just trying to get my template up actually. It's not doing. Oh, there we are. So yeah, we got them side by side now. Now your question specifically was, could the pound yen and the CAD yen be at a good place to short? Now, firstly, what I would say is this. There's various different ways to look at whether something would be a short. It could be a short 5 minute, short 15 minutes, short hourly, short 4 hourly, short daily, short weekly, short monthly. So the first lesson here is to identify what time frame you're referring to, because short in general could be referring to the near term or the long term. So that's the first thing. Whenever you open up a chart and you're looking at anything, make sure you're understanding what kind of term am I discussing here. Now, the reason why I mention that is because if you put your pound yen on the monthly, yes, you're absolutely right. It has risen significantly without a pullback for a long time. Your pullback here has been very weak. We know that price tends to pull back to at least the earliest moving average of 20, but it hasn't done that. So in the longer term, yes, I do think it's going to fall back to this 20 MA. Okay? But the longer term is in the future. So if you're someone who's shorting for the longer term, that might be applicable to you, but you'll need to hear this first. If I swap to the weekly, again, you're very far off anything and you haven't really had a significant fall. Every single fall has been faced with key rejection. So there's buy-side bias, and it's the same for your CAD yen. You fell there. This is where I called it short on the video that you're referring to on my YouTube. You can go and watch it. Called it short, and I said get out because you've got lumps of support here, and you know if you're falling to support, you should be out of your shorts. Okay, rhymes a little bit, so you might remember it. But if I just put it on the weekly as well, and we cross-examine, you can see the same thing. Okay, but only you're nearer to support. You're not quite at your 40 MA and you're not quite at your 40 MA on both charts in both instances. So longer term, yes, I do think you're going to pull back significantly. Yes, but that's longer term. And in between that is various levels of price action. So if I go to my daily, you'll notice that what I'm saying makes a bit more sense because the picture starts to change. Long term, yes, it may fall, but if you go to your daily, what does it look like now? Okay, well, you've fallen from here yesterday, but what's happening is you're coming straight to early support. So this isn't a time to short because you're coming into where you've seen rejection pushing you to the upside. So it makes no sense to be selling into where people are buying, if you see what I mean. So it's now a long, rather than it being a short, it's now a long. So your general question, is it a good time to sell, becomes no, because the price has fallen already. Okay, so no, it's not a good time to sell because you're selling into daily support or daily price rejection to the upside. Although we do think the market is going to fall long term, we think the market is going to rise near term. So your entry is going to be worse than it could be if you just waited to reshort here, for example, and you had suspected that the market might reject from where I just drew. Okay, so really key lesson there. It's all time frame dependent. If I go to the 4 hour, it looks even more of a long, and because you can see that is where you wanted to short. That is where it would have been a good idea to short because all your time frames then start to align with the same bias. But the problem you've got with what you've said now about you shorting now, is it a good time? Well, the market might fall lower, but what you're selling into and what you can clearly see on my chart is all of this support. You see, it's all there, isn't it? And we know it's support, we know it's price action, price rejection levels, because you've previously seen price move to the upside from where we are now. Okay, so therefore, if you're selling into what is a long zone, and Therefore, the answer to your question is no, it's not a good time to short. So you've got to look at the market in terms of the time frame you're referring to. And this is why people lose money all the time. This is what makes a trader fail or succeed. And that's why I've done a big series on it with multi-time frame analysis, as I'm sure you've seen, because you're in the academy. But multi-time frame analysis is what makes trading work. The fact that trading data, candlesticks and price data has to be arranged in the way it is for most people means you've got to understand data on all kinds of time frames. You've got to understand data on your monthly, weekly, daily, etc. Because if you can't understand data on all time frames, you'll find that you really, really struggle. So that's why that's so important to understand. I would say as well, you've got the same thing. It's too late to short at this point, okay, because you've already come down by several candles already. Okay, so you've come off from here and you've fallen 1, 2, 3. You've had a little push up, but it hasn't done a lot. You're coming down. So no, it's not time to short is my answer. Might have just cut out for a second on the stream, but I hope everyone got that. So just remember, your trading has to be time frame dependent. Okay, you can't be trading with a general bias because your entries are going to suffer. You need to diagnose every single time frame going from your monthly to your 5-minute so you get the optimal entry. Okay, so to make that clear, if your bias is short long term on the pound yen, then ideally on the daily, you're going to be shorting at daily resistance. You're going to be shorting at hourly resistance. You're going to need a pull up to here so that when you short, you're fitting all your time frames from the top down. That's why it's called top down analysis. Okay, so I hope that helps and I hope that answers your question exactly as you posed it. Okay, I'm sure it does, and I believe it does. If it doesn't, of course, just ask me. Okay, ask me wherever you want. If you're an Academy member, send it to me privately. If you're watching on TradingView, put it in the comments. If you're watching on YouTube, put it underneath this video as well. So that covers that question exactly, and I think that helps a lot. Just let me know if it does or it doesn't. And of course, you can grab my free training underneath the stream or underneath the YouTube video. Get on board today and change your trading. Thanks for watching, guys. See you in the next one.